Hi traders, in this video we are going to be taking a look at the Coral Trend Indicator. I'm going to show you how you can take advantage of moves such as this one for almost 200 pips. You can see I have the Coral Trend Indicator attached to my chart here. It looks like a basic moving average. If I just place the moving average on the chart to compare, okay, I just put a 14 period. It's quite similar, basically the same principles. Looking to place long trades or buy when price is above the line, or place short trades selling when price is below. Okay, so the Coral Trend Indicator was not included with the MT4 platform which I'm using. If it's not included with your platform, you can probably find it somewhere online to use it. Otherwise, you can do this strategy with a standard moving average indicator. I personally don't think this is much better than a standard moving average in my humble opinion. It does have a fancy feature where it changes color depending on if it's an uptrend or a downtrend, but you know, I'm not going to be taking signals every time it changes color. As you can see from this range here, you're just going to get whipsawed in and out of the market. If you sell every time it goes red or buy every time it goes blue, you know, you're going to get stopped out. Eventually you will catch a nice move like this one when it changes from red to blue. However, the entry is not going to be ideal. Okay, it changes color up here. Okay, so the entry won't be ideal. Plus, more often than not, you're just going to get whipsawed in and out of the market. So it will take you some initiative. It's not a magic indicator like any trading indicator. You're going to have to make some effort, learn how to draw support and resistance, trend lines, learn about candlestick patterns for timing entry and exits. Just be aware of price action. Okay, we'll cover that. This is a Euro Pound EG 1 hour chart. You can use this indicator on any traded instrument, Forex, cryptos, commodities, stocks, indices, etc. And also any chart time frame. I personally prefer the 1 hour charts and above simply because I find them to have more reliable signals due to the fact that they contain more price data. And it also means less time chart watching, which is an added bonus. Okay, so how would I use the Coral indicator? Enough of me waffling on, let me show you. So I'm going to draw this level of support here. Okay, we can see that price is making higher lows. We're expecting an uptrend. Okay, got our resistance level here. Okay, and so what I'm going to do is I'm not going to trade in this because it's consolidation. Okay, it's a range in market. I don't range trade, or I don't like to range trade. I will if there's, you know, it's a very quiet market and just scalping a few pips here and there, but primarily I'm looking to trend trade and catch big moves such as this one. I mean, this move is for a few hundred pips. Imagine how many scalping trades you need to take to get that many pips without having any losses as well. Okay, so I'm going to wait for a breakout of the range, and you can always trade the breakout here. Okay, we see that the Coral Trend Indicator is showing an uptrend. We have a breakout. We have the market making higher lows. We have the bullish candlestick patterns here. 3 white soldiers. Third soldier breaks out from the resistance. And yeah, we have a W formation here almost as well. You can see the chart making a W, and we're trading the breakout of the completion of that pattern. So all of the signals are there for a good trade, and if you were brave and you took this breakout trade, you would have been profit potential of over 150 pips. Could have placed your stop loss just below the Coral Trend Indicator or the market low, and would have been a decent trade. You could have trailed your stop loss all the way up below the lows. So if price did turn around, you'd be taken out for some decent profit. At least move your stop loss to break even, and don't panic. And as soon as you see the breakout, you know, exit here. If you see this one bear candle, you could panic and think, well, you know, good trade, let me get out. You're just going to have to, you're going to leave too much on the table and have to enter again at an unfavorable price point, or just wait for the next trend to appear. Okay, so that being said, you can use the Coral Trend Indicator to wait for the breakout. If you don't want to risk getting in here, because there will be times when this will happen and the price will continue downwards. Okay, you can see here, this candle here pushed above this resistance level, but price fell. Okay, in that instance, had our stop loss been below this low, we would have been fine. Okay, but if we just wait for confirmation, that can be the candle closing above, or just be patient and wait for a pullback. Let the trend form, let the Coral Trend Indicator make that nice upward curve or downward curve for a downtrend, and then look for a pullback. Okay, there. Okay, potential pullback, you can trade that ledge there, breakout to the upside, pullback there. Okay, you can see in fact that resistance level is touched as support here, but if our stop loss are below these lows, we're okay. Okay, for this trade, stop loss below here, we're okay. This trade, stop loss below here, we're okay. Okay, we can wait for another pullback. Here's another pullback in this trend. Coral Trend Indicator is up. Simple as that. Okay, draw your resistance. We have a breakout of the resistance. Resistance becomes support. Have a nice bullish candlestick formation there. Continuation to the upside. Good opportunities to get in on this trend. And as price comes up around here and we see these bars showing indecision in the market, it starts to turn around. It does cross. Price crosses below the Coral Trend Indicator, which could be a sign to exit if you hadn't done already. If you stay in the trend longer, you can look at the market making these lower highs here. Although in saying that, it does go to there, but then we've got this resistance level held up well, and we might be expecting this break to the downside, which does play out nicely there. So with a double top candlestick formation, I've got videos on the double tops and many other candlestick formations for that matter, but this is a sign that, okay, this resistance has been hit, so you're going to trade the breakout of the support there. And an M pattern as well, you can see that M there. See it? Forming the letter M and trade a breakout on the completion of the pattern, just as we did with the W down here. Okay, so as I said, this Coral Trend Indicator is not a magic indicator. You're going to need to be aware of these chart patterns that I've mentioned and where to draw your support and resistance, how to time your entry. Candlestick patterns and breakouts are my preferred methodology. You can use other indicators if you like. For example, let's have a look at the stochastic oscillator. Basically, with the stochastic oscillator, when it has a crossover near this area here, the 20 level, this 20 level is considered an oversold market. So if you have the prices in or around this oversold area and has a cross to the upside, the oscillator suggests that the market's oversold and it could be turning upwards. So you can enter on the pullback. And in a downtrend, it's just the opposite. If the price is up here in the overbought area and crosses below, there may be a turn to the downside. Other things to look for in the stochastic oscillator: divergence. So you've got your bullish divergence, which suggests a rise in market, and you have your bearish divergence, which suggests a bearish market. Okay. So if we look at stochastic entries on this trend, we've got our Coral Trend Indicator showing that we're in an uptrend. If you don't want to trade the breakouts or draw trend lines, you can use an indicator. Crossover there near the oversold zone is a decent entry. Okay, you know, it's the pullback there. You can see the pullback looking at the chart, but if you just want to look at an indicator, the stochastic oscillator will show you that pullback nicely. And another one there. Okay, but these are quite late on in. This would have been an ideal entry point, which is around our initial breakout trade. So the stochastic can help you. You know, you've got the bullish divergence there, we've got the higher lows there. Basically that's the same thing, just a different way to look at it. Price is above the Coral Trend Indicator, so that would have been a potential entry point. There's literally a million different ways you can time your entry. different indicators as well. The coral trend is just going to show you the direction of the market, something that you can do with just a basic moving average. In any case, as you can see, you're still going to need to time your entry. And as always, make sure you've got good money management in place. I like to cut losing trades short and let winning trades run, using a trailing stop to maximize the move as much as possible. Okay, I just wanted to show you trading short using the coral trend indicator. So same principles we did when we were looking for long trades. We wait for the trend to form. We have the M pattern here, breakout to the downside. This support then becomes resistance. Okay, so we're going to wait for the pullback. You can trade the initial breakout here if you want, which would have been a fantastic entry point. Over 100 pips there. You can see the coral trend indicator hasn't quite turned red. Again, just emphasizing the indicators can lag at times. That being said, this breakout could be a fake out and price could have just continued up this way or continued within a range. So there's no harm in waiting for the trend to form. Okay. And we got our ledge there. This is a strong level of support. We can expect a strong breakout, and that's exactly what we get once it happens. The coral trend indicator is facing down, is red. So we know we're in a downtrend. We're looking for sell trades, and that would have been a good entry on the breakout there. Okay. This is a level of support and resistance from the long trade examples we were looking at. You can see that this level's actually been hit more or less bang on, which shows the importance of support and resistance in the long term. This is a 1 hour chart, mind you. So yeah, there are opportunities to enter. If you don't get in on the first one there, we have another pullback here. You can enter there on that breakout. Okay, be aware of this level, so we can just wait for the breakout there. Or if you were ambitious, you can even get the breakout on the pullback towards the coral trend indicator. There's a few of those. Okay, nice wedge pattern being formed there. Price consolidating and a breakout to the downside. Price still below the coral trend indicator. But a couple of nice wedge pattern entries there as well. In fact, that was a wedge pattern as well. Arguably a bearish flag pattern as well there. So coral trend indicator is good for determining the trend. In my opinion, something that you can do by using a basic moving average or just drawing a trend line. So really, I probably wouldn't go out my way to use it, to be honest with you. But if you insist, you can use it and trade this way, or you can use the stochastic again. This time we're looking for crossovers downwards in or around the overbought area. So as the trend is forming, when does the stochastic cross? Maybe that one there. So that wouldn't have been a bad trade entry there to get in on this trend. Another one there. But you not too sure because we've gone above the coral trend. But as I said, indicators can be lagging. But you could always just wait for it to play out. You don't need to jump in straight away. You know, you can see that this resistance holds up well. You've got these bearish candlestick patterns here. So you could have been confident that perhaps this would have been a trade worth taking, at least drawing the support line there, maybe trade the breakout down. By the time we're here, you know, the move's already is gone for a few hundred pips or 100 plus pips. So you wouldn't necessarily want to be selling too low. You can see the new level of support forming. So you might just want to wait for the next opportunity to come along. You ideally want to get in early somewhere around here and maximize the move as much as possible. Okay, so that's how I would use the coral trend indicator. As I said, it's not a magic tool. You will need to use the initiative and conduct some of your own additional market analysis. I prefer, as I said, higher chart time frames just because I find the signals more reliable and you can catch big trends without stressing yourself out trying to day trade all day on 5-minute or 15-minute charts. Okay, appreciate you watching. If you could like and subscribe, that would be great. Catch you on the next one.